This podcast is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business. Welcome to the BizNews Currency Focus. I'm Jackie Cameron for BizNews. With me today is TreasuryONE currency analyst Andre Cilliers to share his insights on the value of the rand. Andre, tell us what's been happening to the rand since Friday.
Well, since Friday, we had an interesting one in the sense that we've seen the US dollar retreating from the highs around the 121 level down to almost breaking the 120 level. That caused the rand to retreat a little bit from the 1420, 1418 levels that was the best level seen last week, right up into the sort of mid-50s almost. By this morning, we've seen some retreat again, and that's simply because we're seeing the dollar making some inroads, or rather losing some of its value again, and the euro picking up towards the midst of the 120s. So a little bit of play around the area, and the rand mostly being driven by what happens in the dollar market.
A lot of South Africans have the perception that the rand's value is linked to the South African economy, whereas it looks like it's far more complicated than that. Can you just tell us how the rand's value is linked to the US dollar?
Yes, it's not only linked to the US dollar, it's linked to a basket of currencies. And when you look at the value of the rand, you should look more or less at what is our trading counterparts and what is our value of trade with our trading counterparts. All of those goes into a basket, and that really determines the value of the rand. You know, it's so interesting that a lot of people still got this perception, they read the newspapers about all the negativity that happens in the country. And then they want to link that to the rand and decide the rand should be weak or should be strong. Generally, that creates a feeling of weakness, whilst we're seeing totally the opposite. And that's why 70% of what happens in the rand market is really determined outside the borders of this country, linked to international situations.
A lot of analysts bracing themselves for a challenging week for the rand, with Reuters pointing out that there's a big week in the US with an employment report. How does that US employment report feed into the rand?
Well, the US employment report feeds into the rand simply because that tells us what happens in the American economy. The American economy, being the biggest economy in the world, has got a dramatic impact on the rest of the world and the outlook for the rest of the world. So if you see an American economy doing well, the general feeling is that we'll see the rest of the world economies doing well, and that will filter through into the emerging markets. More so that if the rest of the world's going to do well, there's generally a risk-on situation, which simply means that people are more willing to put money into riskier investments, of which the emerging market space is then one of the places that attracts funds and investment.
And Andre, analysts are also waiting for the Moody's report to come out on South Africa on Friday, and there may be a ratings downgrade. What is your view on the Moody's report that's scheduled to be released at the end of the week?
I don't think that we're going to see any downgrades. I think taking the pandemic into account, taking the little bit of growth that we're seeing coming back into the economy, we're seeing quite a resilient stance from the government in terms of the fiscal expenditure, especially when you look at the negotiations going on around the wage negotiations at this point in time. The government seems to be very resilient and seems to be turning on the screws a little bit in spending. And that's definitely something that the Moody's people would look at. Apart from that, we have seen that the collection of revenue looks a little bit better. We have also seen that on the commodity space from the mining houses, that they brought in quite substantial profit figures that was reported towards the end of January. And we should not forget that that bodes well for the fiscus as well, because that means that the tax collection would look a little bit better. And as we see spending coming back on board and people feeling generally a little bit more relaxed, and we are not seeing that massive spending coming in from retailers at the moment, but it seems to be going in the right direction. That would also bode well for the fiscus in the sense that the tax collection from VAT, etc., would look better. So generally, I think more or less a stable situation, hence I don't think that Moody's would make any changes at this point.
Andre, we've chatted a bit about the US dollar here. What about the rand versus other currencies like the rand versus the euro? Where do you see that going?
Well, generally, the expectation is that we might see the dollar weakening. It is in a bit of an overvalued situation at the moment, and we could see the dollar weakening towards the end of the year, especially going into 2022, which means that we could see the euro and the pound, etc., doing a little bit better. And if that happens, then we could see the cross rates of the rand against those currencies weaken slightly. But if you look at the whole space and you look at everything going on at the moment and the high commodity drive and how well commodities are doing, we should not look at this point in time for a massive weakening of the currency. There's absolutely nothing on the horizon that says there should be a massive weakening of the rand. And at this point in time, if you look at the valuation of the rand in terms of an overvalued or undervalued situation, then the rand is still in a slightly undervalued situation, which actually means that we could see the rand strengthening further, right into that the risk factor of local circumstances, fiscus, deficits, and all these things from that side, and you put it in a bit of a risk premium, then it brings it slightly more back to a par value situation. So nothing on the horizon that tells us that we should see massive weakening at this stage against any of the currencies.
In your weekly report, you also pick up on commodities. Can you, just for people who are not very familiar with currencies, can you tell us why the commodities are so important for you when you try to gauge where currencies are going?
South Africa is a commodity-driven economy. We are very rich in minerals, and when you look at our export proceeds, then the mining sector makes up quite a big part of the South African economy, quite a big contributor to GDP. Smaller than it was in the past, but still a significant contributor. So if you see the commodity prices increasing, it simply means that on the value of our exports and the net income that comes into the country, that feeds into the trade balance, it does have a very positive effect. Now, if you go back, and I've mentioned the trade balance now, then currently we're running a very, very high trade balance surplus, basically standing at record highs. And if you now just take that trade surplus and you think in terms of supply and demand, there's an oversupply of US dollars into the market feeding in from the trade balance side. And that tells you why the rand is currently so strong, because there's more people selling dollars than there are people buying dollars. And if you look at the demand side, then I've mentioned earlier that we're still not seeing massive retail spending, and we're not still seeing people flocking into shops and buying. We're not seeing manufacturing importing massive amounts. Inventory levels are still running at fairly low levels by companies. So your demand is slow. And as long as your demand is slow and your commodities doing well and other exports doing well and your trade budgets keeps on ballooning, you will have a positive spillover into the rand market.
Andre, before we close off here, we have a very popular webinar on a Friday which focuses on personal finance issues. And one of the most common questions we're asked is, which currency should I invest in when I go offshore?
Well, I would certainly not look at the cash market, because if you put it into the cash market and you go into the euro countries, euro-denominated countries, then you have negative interest rates and you actually get less for your money after a year than what you've actually put in. So the only places where you do actually get some interest is out of the New Zealand's, Australia's, and America's, and a little bit in the pound. But the cash market's doing very, very weak. So if I were to put my finances or some of my money into offshore investments, I would look away from the cash markets and look at investments into other avenues, other asset classes like equity, etc., where there's a better chance of actually getting money. But I immediately want to jump back and say, when you look at your finances and you look at personal finances and you look at investments, then you must first of all look to it as, that old saying, don't keep all your eggs in one basket. So don't keep all your money offshore, don't have no money offshore. Have a balance between the two, look at your personal situation, and when you go offshore, diversify into various asset classes, and to most probably be in something, in an asset class or in a unit trust or whatever, that gives you exposure to more than one currency, because that's also possible. If you invest in a proper unit trust, for instance, then that unit trust would be comprising of assets in more than one country, which would give you exposure to more than one currency.
And that's all we've got time for on this week's BizNews Currency Focus podcast. I'm Jackie Cameron for BizNews. You've been listening to TreasuryONE currency analyst Andre Cilliers sharing his insights on the value of the South African rand. The BizNews Currency Focus is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business. This podcast is proudly brought to you by TreasuryONE, South Africa's leading treasury solutions company that unlocks financial value for your business.